real estate broker and investor, I've been watching the growing conversation around 40 and 50-year mortgages. And today I want to help you understand what's real, what's hype, and whether these loan options could help you or your children step into homeownership. Hi friends, my name is Silvia with Wealth Builders Realty. We are a full-service brokerage in the Boise metro area of Idaho where we specialize in helping you build long-term wealth through real estate. Since not everyone has $500,000 in cash just lying around, today we are covering financing, in specific the 50-year mortgage that has caused quite a stir as of late. But we're not just talking about low payments and more debt. We're talking about shifting how we think about real estate, family wealth, and financial flexibility. So let's break this down. Let's start with 40-year mortgages, which are already in use, but not for everyone. 40-year mortgages exist in three key use cases. First, as a loan modification tool for federal loans provided by FHA, VA, and USDA. In 2023, HUD approved a 40-year term to help homeowners lower their payments instead of facing foreclosure. Second, builders, usually with their own in-house lenders, are offering 40-year financing to help buyers qualify for their homes in high-cost markets. Finally, there are many non-QM loans for investors available. Most of the time, these look like an interest-only loan for the first 10 years, then go fully amortized over the next 30. They are useful for maximizing cash flow on rental properties with a strategic plan in place. I'm not advocating for interest-only loans without a long-term plan. 40-year mortgages are a real product, but it's niche. Now let's talk about the 50-year mortgage. Yes, 50. Right now, this is still in the idea phase. It's not an available loan product through Fannie Mae, Freddie Mac, FHA, or VA. It has been floated by economists like Lawrence Yun at the National Association of Realtors. It's being discussed in articles on platforms like Bigger Pockets, and I'm sure there are a multitude of opinion pieces on whether they are helpful or not online. But no, you can't go and get one today. The conversations happening now are about how we adapt to a market where affordability is collapsing for first-time homebuyers. And as things worsen, these might become a reality. For decades, the playbook was simple. Buy a home, pay it off in 30 years, and retire debt-free. Unfortunately, that rule was built for a world back in the 80s where homes cost 2 to 3 times your income, people stayed in one job for life, and inflation, which was at almost 10%, worked in your favor. And while past generations followed the playbook into homeownership, and quite a bit of wealth, mind you, with current prices and rates, that is not the way today. The fact of the matter is that affordability is eroding at an extremely high pace, and great minds are looking for alternatives to achieving the American dream, even if it's in the form of a 50-year note. Critics argue that a 50-year mortgage means paying way more in interest, staying in debt for life, and delaying real equity forever. And technically, they're right. If you held that loan for 50 years without ever refinancing, selling, or paying extra, you'd pay a fortune in interest. But let's be real, almost no one keeps a mortgage for its full term. Today, most buyers move every 7 to 10 years, or they refinance to take advantage of a lower rate. Some tap into their home's equity for remodeling projects or to pay off other debt, all of which restart the clock on their loan. The truth is, many Americans are already living in rolling 50 to 60-year mortgage timelines. They just don't recognize it as such. So the idea of a 50-year term isn't about staying in debt forever. It's about structuring payments to align with modern life. Let's look at what a 50-year mortgage can accomplish. On the one hand, it offers liquidity and lower payments that can prevent foreclosure or hardship by giving people flexibility. Having a lower base payment gives you peace of mind in case of a job change, health events, or market downturns. You can always pay more, but you can't go backwards. On the other hand, a 50-year mortgage can be a brilliant tool that allows for strategic investing in other places. Say, an index fund tracking the S&P stock market. Having that money growing at a higher rate than what your home appreciates could be a real wealth changer. The average return of the market has hovered around 10% since 1957. In comparison, real estate has averaged 4 to 5% per year. And while yes, we have seen much higher appreciation in the last 5 years, you can't count on that happening every 35 years. Let's look at a quick example of how you can actually gain wealth by choosing a 50-year mortgage instead of 30. Say you take out a $575,000 mortgage. A 30-year loan at today's 6.25% rate will provide you with a principal and interest payment of about $3,540 per month. If you take that out to a 50-year amortization schedule, that payment drops to $3,133. The monthly difference is a whopping $407 per month. That $400 invested monthly at a conservative 8% per year would give you over $550,000 over 30 years. That's the opportunity cost of locking your liquidity into your wallets. Now, in reality, we need to understand that if a 50-year mortgage comes to fruition, it will most likely be offered at a higher interest rate than the 30-year. Just like taking out a 15-year loan saves you about 0.5%. Notwithstanding, that 50-year at 6.75% becomes $190 invested monthly for a return of $267,000 in 30 years. Friends, it's not about dragging out debt. It's about using the extra cash wisely. Now, not everyone will take advantage of the wealth building opportunity a 50-year mortgage can provide. Otherwise, Dave Ramsey would be out of a job. But a longer mortgage term might still be the answer for many homeowners today, both current and future. For those who already own a home, their biggest worry isn't their next move, it's whether their kids will ever be able to buy a home of their own. And this fear is completely justified. We have seen home prices up 40 to 60% in just a few years. Interest rates are double what they were just a few years ago. And while we had a reprieve in rents for a brief minute, rents are back to increasing every year. The National Association of Realtors recently reported that the average home buyer in 2024 was 38 years old, a new high. In the 1980s, the first-time home buyer was 29. In addition, 17% of all home buyers, not just first-timers, purchased a multi-generational home. Why? 36% said cost savings, and over 40% did so to accommodate children over 18 moving back home or children over 18 who never moved out. A 50-year mortgage might not be ideal, but it could open a door. It could be the strategy that helps your children enter the market and start building wealth instead of waiting 5 to 10 years and falling further behind. So instead of closing the door on something that could be a very strategic tool, let's talk about legacy, about flexibility, about options. If you pursue a 40 or 50-year mortgage, you need to have a plan. First, if you can, make extra payments. Making even one extra payment per year can shave off thousands in interest paid and about 4 to 5 years off your mortgage term. Second, refinance when rates drop. Interest rates go up and down. And while I don't think we will ever see 2% rates, and if we do, we will have bigger fish to fry, even 1% drop could make a big difference. Plus, refinancing at the right time can also allow you to go into that 30-year term rather than staying with the 50 if that is your goal. Last, use the liquidity to invest, save, or strengthen your household budget. Don't let that opportunity of investing the difference go to waste. Even $200 per month can go a long way toward building wealth. So, should you consider a 40 or 50-year mortgage? Well, only if it matches your life stage, your risk tolerance, and your strategy. It won't be for everyone, but if it helps you buy your first home, invest with cash flow, or help your kids build equity, it's worth learning about. And here at Wealth Builders Realty, we are happy to walk you through your real estate options. Reach out to us on our website, and of course, like, subscribe, and comment. Would you consider a 50-year mortgage? Why or why not?